Hey folks, Dan Frio here with your market update for December 2nd, 2024. So mortgage rates, I thought they were going to drop a little bit more on Friday, but they halted. The banks closed at 1 o'clock, so what do you expect? But the bond market rallied on Friday, so I got up this morning, I'm thinking, okay, bond market's going to continue to rally. Even if it was flat today, I was good. But unfortunately, the market gave back all the gains that we got on Friday. So let's take a look at it. Here's where the bond market is right now. Let's just cut this screen in half right through here. Here's what happened on the left side of the screen. That's what happened on Friday. And on the right side of the screen, that's what's happening today. Look at this gap that we have right through here. So here's what happened on Friday. The market opened. It kind of stayed stagnant right before it closed at 1 o'clock. Usually open until 4 o'clock, but it closed at 1 o'clock on Friday. And then the market before the close, it rallied. It was up about 40 or 50 ticks. So that means mortgage rates will come down probably at least an eighth, maybe 0.2%. Well, because the bond market closed early, a lot of banks' lock departments closed early, so we couldn't take advantage of these rates. So I get in this morning saying, okay, as long as the market's flat, we should pick up a nice little, maybe up to a 0.25% cut in rates. No, the market gave it all back and more. So here's what we're seeing so far this morning in the bond market. It opened up all the way, it opened down right down to here, and it's continued to detract or go down even further today. So what's going on in the markets? Let's take a look at what we're expecting this week. So right now, what the markets are waiting for is the Treasury yields rise as investors look at key labor data that's coming out this week. Now, the latter part of the week is when we're getting it. So let's look at the economic calendar to see what's in store this week. So on Monday, we just got the data in right through here. Manufacturing, ISM manufacturing, PMI, and prices, they're all quite a bit. Now, let's say they're in line. Let's see what the overall markets are doing right now. CNBC, go to that. It's the easiest one to read. Right now, we got the Dow Jones down 184, S&P up 8, NASDAQ down 177. Nothing really there to write home about, so that's really not shocking the market at all. So that data, it just came in minutes ago when I was doing this video. So that's basically blended into the market already. So we're not going to really focus in on that. So now what's going forward? Here's that jobs data that the headlines we're talking about right through here. Key jobs labor data. ADP payroll numbers. They're coming in on Wednesday, but on Tuesday we get the JOLT index. This is how many job openings and transfers there are. And it's been about 7.4 million, consistently. I'm not seeing really anything that should change there. On Wednesday, we have the ADP payroll numbers. I'm still kind of with this on ADP numbers. For a while there, they were doing pretty good. Well, they were doing really bad. Then they had a spell doing pretty darn good, but the last reading they had was kind of off as well. So we're going to skip through that day. It will be a market mover if there's major moves. But what we're focusing in on is Thursday's data, the initial jobless claims, and then Friday, the unemployment rate, and then the average hours earnings. So that's what we're really focusing in on. So that's what we're going to see this week. So the only data that should really kind of move the markets, you'd be looking at Wednesday with the ADP payroll numbers, and then Thursday, Friday, if these numbers come in quite different than what was expected, that will be market movers as well. So the good news is the Federal Reserve, here's the backdrop that the Federal Reserve has to look at. So these are the four components that here's three components they monitor, and then the one thing they control. So they control the federal funds rate. I don't know if you're watching this video, if you're new to this, the Federal Reserve only controls the federal funds rate. They don't control mortgage rates, car loans, credit card rates, only the federal funds rate. So what's expected to happen at the federal funds rate, the next Federal Reserve meeting? That's what we want to focus in on. So right through here, we have the inflation numbers. This is the PCE is what the Federal Reserve really monitors. It recently ticked from 2.1 to 2.3, but the markets kind of absorbed that with not a problem. That was kind of weird. The unemployment rate staying stagnant right here at 4.1. I'll give that a thumbs up. And the GDP is at almost 3%. So I'll give that a thumbs up. So here's what we're seeing. So right now, the federal funds rate is 4.5 to 4.75. What's expected at the next meeting? So if you go to the Fed Watch tool, you can Google it. It's the CME Fed Watch tool. In 16 days, it tells us the Federal Reserve is going to do what? Well, there's a 66 or 62% chance they're going to have the federal funds rate at 4.25 to 4.5. So what does that mean? Well, let's go back. So if we're 4.5 to 4.75 right now, and they're saying we're going to be at 4.25 to 4.5, that means the Federal Reserve's most likely going to cut 25 basis points at the next meeting. So that's what the expectations are. And I'm kind of on that bandwagon as well. As long as the data that's coming in the next few, up until that time, isn't really any shock and alls, we're probably going to see the Federal Reserve continue their 25 basis point cuts until they're comfortable where they hit that net neutral number that we're trying to figure out. So that's our report for this morning. My name is Dan Frio. I'm just an average loan officer out here trying to win your business. The good thing about me is I work at ServBank. We're the 10th largest mortgage servicer in the entire country. Plus, we're also one of the largest mortgage brokers in the country. So think of it this way. If you want to get pre-qualified to buy that first house or talk to somebody about a refinance, you go to us and there's one application, one credit pool, and we're going to shop your loans between the products we have here at ServBank and with up to almost 50 different lenders we're working with at this time to give you all those products and all those rates right at your fingertips. So how do you get involved in this? Well, go to therateupdate.com if you want to get the application started. Just click apply now. If you want to check and see if there's any grants out there to help you with the down payment or closing costs, just click right here, Grant Finders. We handpicked some grants in there to help you out there. And right through here, this is the thing that's blowing up right now. We're offering us one-on-one scheduled consultations with me or Alan or David. There's only 3 of us taking calls, folks, and we all have over 20 years experience. So please give us a call or schedule an appointment with us. It's pretty simple. You just click that. You go to our bookings page and just schedule with somebody there. Or you can go down to the bottom right through here, and you can find our 800 number as well as my email address. And it is right, I promise you, it's down there somewhere. It's 844-775-5626, or you can email me personally. Yes, it's me, and I'm the one answering at dan@therateupdate.com. So thanks so much for watching, guys. Have a fantastic day, and I'll be back at the closing bell to let you guys know how all this ends for the day. Take care. See you then. Bye-bye.